Bitcoin is retesting the major $38,000 resistance. Will we see a break through this level? Let's go ahead and find out. Okay guys, welcome back to the channel. Thank you for tuning in. I hope you're all having a fantastic day. In today's video, we're going to be going over Bitcoin's price action from a macro and short-term perspective, discussing the charts, the technical levels, and the most important structural levels you should be watching out for. Will Bitcoin continue through 38K? If so, how high could Bitcoin go? Or will we see another rejection from this level? Before we get into it, smash that like button, hit that comment button, and subscribe to the channel. We post daily Bitcoin analysis focusing on the facts, the data, the technical and structural information, and the relevant economic events. No hype, no BS, no emotion, pure raw TA. If that is the kind of content you are interested in, join us on Telegram. It is the third link down below. You will get access to charts, updates, videos, educational posts, news events, and everything you need to stay in the loop of cryptocurrency, Bitcoin, and the relevant economic news. If you are interested in trading, you can join our VIP group. We post trading signals with exact entries, exact targets, exact stop losses, trade justification, exclusive analysis, and everything else you need to trade effectively. Not only will you get access to the VIP group, you'll also get access to our group chats, our general chat, our trading charge and education chat, our trade setup chat, our news chat, our help chat, and our daily video chat. If you're interested in joining the VIP with over 600 members, contact me in the pinned comment of the free channel for more info. Let's dive right into the video, guys. Starting on the market data. How are we looking for today? Volume is down 6%. It is sitting at 115 billion. That is very high still, so it's looking pretty decent. 24-hour liquidations are down 57%, sitting at a total of 141 million, with 100 million of those liquidations actually coming from short positions, as Bitcoin saw a massive 6% gain from this high time frame support level. We saw a correction from that 38K level, came all the way down to our first target, which will be our uptrending diagonal support line. We did say if we lose this level, we can expect a continuation lower, but we said in Telegram, guys, this is not the time to be taking late shorts. We do not want to be looking for late shorts in this level, as this area is still a support. We did see quite an impressive bounce on a level, actually pushing Bitcoin all the way back up above these local high points to retest this 38K zone. So a lot of liquidations there on the short side of the argument. We'll come back and discuss this in detail later on. Moving back to the data over here, the volatility index on the 60-day and 30-day. The 60-day period is still pushing sideways as the price corrected downwards, and on the 30-day period, we are still seeing that volatility index plateau. A little bit of a bump up, but nothing too significant. Again, a large move is coming for Bitcoin. When we see these extended periods of compression in volatility, we generally are met with directional moves, whether that be a move to 48K or a breakthrough at $38,000 level or a correction back to 32K. We are going to see quite a large move at some point in the future. Moving over, guys, to the DXY. The DXY saw a pretty brutal last few days. Of course, that CPI data coming out relatively bullish, indicating that inflation month on month is actually coming back down. So with that, we did say the DXY would correct, and the DXY did fall downwards. We actually reached that 104 to 104.5 level of support, which is going to be his local top point right over here. So we have come down now, and we actually are retesting a short-term support. As per the current trend, the DXY is in a downtrend while it remains underneath this downtrending trend line. And again, it is in a downtrend while it remains below this parabolic curve, which is going to be this blue trend. So at the moment, the DXY is looking relatively bearish. However, we are at support, so we could see a short-term bounce over the next coming days, something to consider. The S&P 500 is looking very good. We did see a strong bounce on our neckline of support all the way down at 4,200. Bouncing back upwards, in fact, breaking over its downtrend on the short term. We have actually broken out of here, but currently retesting this 4,500 level of resistance. Our next diagonal trend is going to be from our local top in December 2021 and our local top in July 2023. We break above this level, we are very likely to retest these high points. Something to look out for going forward. The Dow Jones is looking very similar. Again, we have that respective diagonal downtrend from those two key points respectively, as we do on the S&P. If we do break above that diagonal, we could see a continuation to these high points. Until then, this is an area of resistance, and again, we are looking for a continuation to DXY continues downwards. Enough being said, guys, we're going to take a short break to discuss Bitget and BingX, and we'll jump back into the video with Bitcoin. I wanted to briefly interrupt today's video to discuss the two exchanges we use on this channel, Bitget and BingX. So which exchange should you sign up to? If you look to the right hand side of the screen, you're going to see the list of differences in relation to KYC requirements and the countries these exchanges offer services to. The first link down below being the Bitget link, and the second link down below being the BingX link. No matter which link you sign up to, you're going to get up to 15% discounts on your trading fees, up to $5,000 in trading rewards, and of course, you'll get access to every single MegaWhale exclusive bonus campaign we run on these exchanges. Alongside that, Bitget and BingX are incredibly similar. They are both ranked top 10 in terms of trading volume. They both have extensive liquidity pools and market pairs offering up to 125x leverage. And most importantly, they both offer protection funds for their users to protect you against any third-party hacks. So get started now and support the channel by clicking the links below. Thanks for listening. Okay, so Bitcoin, guys, we are sitting at that 38K level. We've got a lot to talk about today, guys, but before we do, I do want to go ahead and add something to that Bitget ad. We do have a massive promotion going on for Bitget at the moment. You do have to be underneath my link. We are giving away Apple Watches, we're giving away iPhones, we're giving away, laptops, headphones, even a bloody Rolex, guys. All you need to do, head over to the channel, check out this message. It'll tell you how to enter the campaign. So for the next 14 days, your rewards are based on trading volume. You do have to be underneath my link to actually register. It is the biggest giveaway Bitget has ever done, and I'm super proud to bring this exclusively to the community. So check that out. Let's dive into the video. So Bitcoin, as you can see on this daily chart, has once again pretty much come up and retested just shy of that 38K level. In fact, if we go ahead and really zoom up, you can see we came up to around 37,980. And as we've said before, guys, and as we'll say now in today's video, if we take a look at the bigger picture for Bitcoin and really zoom out and discuss our supports and resistances, the next major horizontal resistance ever since the breakout of 32K is very much, in fact, the 38 to 40K level. This is the primary and most important major level of resistance, sitting between 32 and 48,000. If we look at the high time frame charts on the monthly, we can see, guys, the horizontal trend line, the black horizontal trend line, is going to be our 32K level. I'm going to go ahead and draw it out. This is our 32K level. The dotted trend line is our 48K level. If we look historically, every time we break above the horizontal trend line, okay, the horizontal trend line, we end up moving toward the dotted trend line, which the dotted trend line represents the dead cat bounce high of the bear market, okay? The dead cat bounce high, the first dead cat bounce high after the bear market started. Every single time we see a monthly candle close above that horizontal line, we move toward the dotted trend line in the near future. Once we have reached the dotted trend line, we generally see a correction, but the correction never takes us back below that horizontal trend line for a monthly candle close. Even that COVID-19 crash, we did not close below that horizontal trend line. So that tells us two things. Number one, the overall macro trajectory for Bitcoin is targeting 48K from the 32K breakout. However, here's the thing. Until we reach 48K, according to our historical price action data, we could still close a monthly candle sub 32. However, that would be very, very unlikely for the price to go back and close a monthly under 32. The narrative of which is driving the price action up has to reverse. And this entire narrative, this entire price movement has been established essentially on the bullish narrative, which is there is going to be a ETF approval at some point in the future. So unless we lose that narrative, unless the narrative flips bearish, it is unlikely this entire rally will be deleted. Now, I'll go a step further, guys. If we are looking for a continuation to 48, this range, okay, this big range over here, between 32 and 48, the middle area of that range is going to be the 40 to 38K level. And more importantly, if we take a look at the VRPV, we can see, according to the VRPV, we'll go ahead and zoom out a little bit so we can see it better. And again, it's hard to scale this one up. I'm going to go ahead and try to scale this up a little bit more for you guys just to see. We'll go ahead and change this to a, let's go 100%. Let's just see what difference that makes. All right, there we go. That's a little bit better. We can see more scaled up now. That 38 to 40K level is a major peak in the VRPV. We have, of course, guys, this area was a gap. Okay, and you're probably thinking, what the hell is a gap? It doesn't look like a gap. So let's go ahead and really quickly show you something. If we go back all the way over here and just delete that price action, pretend it doesn't exist, we can see we had a massive gap here in the VRPV, which indicates an area of low historical resistance. If you remember back to our videos months ago, we said if we break over 32K, we are likely going to see a strong move to 38K as we are entering a range of low historical resistance. And with that move, we would have bullish momentum, bullish volatility, and of course, we would have overall bullish momentum. So moving back to the current price action, we can see on that VRPV, if we bring it back to that high percentage, we can see that that gap has now been filled with orders. So this area now provides a decent amount of support toward the downside, meaning it's going to be relatively hard for the price to break back toward the downside, particularly that 33.35, that 33.5 level of support. But looking at the upper level of the VRPV, what we can see is that 38 to 40K level provides a massive area of resistance. In fact, moving past that 40K level, we start to see the VRPV drop off towards 48, indicating, just like we broke above 32K, when we break above 40K, we're going to be moving through an area of lower historical resistance. We'll have bullish momentum, bullish velocity, volume bullish, everything will be bullish, and the price is likely to continue towards our next macro level of resistance. So the 38 to 40K level is essentially, to put very easily, the roadblock between now and the next move to 48K, okay? So with that being said, it is a major level of resistance. So we could see potential corrections from this level, and just as we discussed in our prior videos, those corrections could bring altcoins down for better entries. So we'll go ahead and discuss that in today's video, and we'll get to our short-term analysis. But let's just zoom out for a moment and talk about this higher time frame chart from a technical perspective. So if we go ahead and bring up our RSI, we have been discussing this for quite some time because, as you know, I am a momentum trader. What I trade based on is overall momentum. So I use RSI, marks OB, and a whole variety of different technical indicators. But what we are looking at is going to be this trend line. This trend line now has been validated. It has been properly validated with 3 points. 1 point, 2 points, and 3 points is a trend. So we have our momentum trend represented by that RSI. This overall trend is upwards, right? We have overall rising momentum, which is a very good thing. We have rising momentum. We are moving into resistance. On the short term, we can see momentum is starting to fall, which is suggestive of slight weakness at this resistance. If, however, we see at any point the RSI break back below this uptrending support line, which I would assume at some point is going to be inevitable. It is inevitable we break down from this level. The big question is, will we see a break over 40K before we do that? Because if we break over 40K, the price will go much higher, and the breakdown of this RSI trend line will have less of an impact on the chart in comparison to if we break down of this RSI trend line prior to a break of 40K, we could see a larger correction. So if we do break of this trend line If we do break below this RSI trend line, that would indicate momentum, okay, has flipped negative. If momentum flips negative, and remember, momentum, okay, is a combination of buyers, okay, and sellers, but more importantly, the change, okay, the change over a specific period of time of the buyers and sellers' strength. So we see a significant shift towards sellers, or we see momentum falling. That is a representation of buyers are exhausting at resistance, and with exhaustion, we could potentially see the bulls or the bears, take control and push the price lower. So we do see momentum negative. That could be a sign a correction is coming back to 32K. So definitely keep that in the back of the mind. Let's go ahead, guys, and jump into the short-term price action. There's a lot to talk about, guys, so let's take a look. First and foremost, we're defining our key levels, and although there is a lot to talk about, from a technical perspective, surprisingly, not much has really changed because our key trigger levels have not been broken. If we take a look at the two most important horizontal levels, it is going to be the 38, okay, and the 33.35. This is our bullish trigger. This is our bearish trigger. Our bullish trigger will result in a continuation through 38, potentially to 40,000. Our bearish trigger will result in a breakdown, potentially as low as 30,600, which would clear. Okay, look at the VRPV again, guys. Look at the VRPV over here on the right-hand side. Do you see how we have a gap here in the VRPV? That breakdown of that trigger point, the 33.35, would likely fill that VRPV gap and push the price back to 32,000. So again, very, very important stuff here on the short-term chart. You have to be watching these levels. So what does that tell you right now? From a pure risk return perspective, you are better off taking shorts here with very, very tight stop losses above this trigger point, looking for a high time frame continuation downwards. Now, it's very unlikely this high time frame continuation downwards will play out perfectly. Like we've seen before, we can see bounces from these horizontals, bounces from these horizontals, bounces from these diagonals. But if you're looking at it from a pure risk reward perspective, okay, and you're looking to front run a pullback, that right now would be a good entry. Okay, in my opinion, that would be a good entry. Now, if you're looking for safer shorts, wait for the momentum to flip negative. You wait for the momentum, you wait for the technical validation. I'm talking purely if you have the risk tolerance and you want to front run this correction that could potentially happen or may not happen, this would be the best potential entry because you're in validation, okay? The point of which you know you will be wrong is so close to your entry price, okay? So let's talk about this a little bit more. If we do break upwards, we're going upwards. There's no doubt about that. There's no doubt about that. We break above this level, we head upwards, we clear this gap, we move to 40K. Perfect, awesome. Short-term trend is this green line. The short-term trend is technically upwards. So, with that being said, we still have an overall uptrend in the price action. If this uptrend is lost, if we break below this uptrend, we found support, we found support, we found support 4 times. If we lose this uptrend, that would automatically result in, of course, the RSI breaking down, the daily charts showing signs of exhaustion, and the short-term price action likely correcting to our bearish trigger. Again, just because this is a bearish trigger, it doesn't mean we are guaranteed to break downwards. This could still act as an area of support. So definitely keep your eyes on the charts, guys. Let's dive down to a small time frame and discuss what is happening right now and what is likely to happen in the very near future. So let's dive down to a 30-minute chart. Over here, we can see Bitcoin has seen a nice rally upwards. We can see the RSI is massively oversold. Not that it means anything, guys. I don't really care about whether the RSI is oversold or overbought. I think using oversold and overbought indicators is utterly useless. The price can remain overbought and oversold for so long and continue in the direction that you wouldn't believe it. You just wouldn't believe it, okay? So I don't generally care when something is oversold or overbought. Doesn't really matter. I care about momentum shifts. What we can see here is a potential negative momentum shift loading. If we see that RSI break down, that would indicate a negative momentum shift. And of course, that could result in a rejection from that 38K level and a continuation lower. What I would be watching out for here is wicks into this range, okay, for the short term. I'll be watching for liquidity grabs upwards into 38K, but I'd also be watching for a breakdown and, more importantly, guys, a close of the RSI below. We don't care about just the wick down. We don't care if this happens. We care about a pivot. So we care about that 30-minute closing below this level. So RSI locks in based on closes, candle closes, on pivots. It can change. In the next 15 minutes, we can see it break down, okay? And you'll enter, and then within the same 15-minute period, we can see it look like this. And then where's the breakdown gone? It's disappeared because the RSI works on pivots. So that is what we're watching out for the short term, guys. Look for 38K. We break above it, we can expect a continuation. Short term, we are looking like we are coming up to that 38K resistance. We could potentially see exhaustion here. We could potentially see a correction developing from this level. If you want to catch that rejection, look for the small time frame charts. Look at what is happening on the smaller time frame. Watch how that develops and extrapolates to the higher time frame. And then more importantly, come over to the daily chart and take a look at this level. If we see a breakdown here, we are going to see a correction. Will we see a correction to 25K? I don't think so. I don't see this entire move being deleted unless the ETF gets denied, as the whole narrative that has pushed this price action up is centered around a ETF approval. So unless the narrative of which is driving the uptrend gets removed, it is unlikely the entire uptrend rally will be removed. With that being said, guys, if we see an ETF, denial, I don't think it's going to happen. I'm not a fortune teller. I don't try to predict the future. I simply relate and refer to what the charts are suggesting, what the buyers and sellers are doing in real time. But if we do see an ETF denial, it is very likely that this entire rally will be deleted, because this entire rally is being built on the assumption ETFs will be approved. Now, that is it for today's video, guys. I hope you enjoyed. Check out the Crypto Academy course. It is the course, 10-unit course, link down below. We teach you guys how to trade. We teach you, more importantly, what TA is, how to use TA, and of course we go through a bunch of indicators, a bunch of market patterns, and we teach you the essential building blocks that you need to go forward and develop your technical analysis skills in the future. Thanks for watching. Catch you guys in the next one. Cheers.